Cool. All right, cool. I think it's in record. Yes. All right, awesome. Okay. So yeah, let's go to the next slide. All right. Also, I'll insist you to take notes as it'll help in the learning process. And I understand that everyone learns at a different pace. So if you feel like I'm moving too fast, please let me know. Like, don't be ashamed. Tell me, hey, like, hey, Cash or Oscar, you're going a little too fast, man. Slow down a little. Don't be ashamed. I'll wait for you guys. You guys laid the money for me, man. The sales part is over. I'm here for all of you now, okay? All right. So today, we're going to learn how to beat the market maker. And to be able to do so, you must fully understand their objectives. You must fully understand their objectives. Objective number one, you could record me, you could write notes, however you want to do it. It's up to you. But objective number one is to induce traders to take a position. What do I mean by that? What I mean by that is that they will show you something in the chart to make you click that buy or sell button. Your account is of no use to them if you don't take a position, So they're going to show you something in the chart and make you be like, oh, okay, well, let me take this trade and this and that. That's their job, to induce you. This business is about money. So, objective number two is to create panic and fear in the markets. What do I mean by that? I'm talking about news, monster candle spikes, quick moves, inexplicable price behavior. All of this crap catches you in the moment. You only think about in the moment, not in the long run, So this is what makes you probably do a bad trade sometimes, And I'm gonna be here to help you fix that, okay? Objective number three, obviously last but not least, hit your stops, clear the board, get you in margin trouble, and pocket your hard-earned money. That's what they want to do, right? So now that you understand that now that you understand this, you know that this is not a game, But once you learn their behaviors and react accordingly to it, you will own these suckers, man. Trading in line with them will bring success in the business. So how do we beat them? You'll need to understand that they do false move trap moves. And these trap moves are as follows. Lesson one, false moves and learning market behavior. Let's get on with it. How to beat the market maker. The trap moves are made the beginning of the week, Sunday going into Monday, the beginning of the session, the end of the session, the end of the day, and the end of the week. Example, the beginning of the week, Sunday, Monday. Let me show you something real quick for that. Here's just a small illustration of what I mean by trap move Sunday, Mondays, okay? So just stick close attention. All right. I failed art, by the way, so excuse my art is really crappy. But here you go. Sunday. All right. Sunday is usually accumulation day. Accumulation, which means hit the stops on both sides. Pending orders, pending orders. This is why I don't use pending orders. I just market execute. So Sunday. So sometimes there's variations on the team. Sometimes they'll go up, sometimes they'll go down. But on this one, let's just say they're going to go down. They spike the low. I'll talk about the low on the next lesson. So, but just keep that in mind. The LOD, the low of the day. You can write it down if you want. LOD. It's a blue tracer. I'll talk about it though. But yeah, they come down. This is the day that breakout traders possibly get rewarded. The breakout traders, are the ones that put their limits over here, somewhere over here. These guys get 50, book 100 plus pips, right? So these guys get here. They come here. They spike the low and come back here and get the traders that sold over here. The ones that sold, that's like they say, sold at support. The ones that sold late. Now these guys are stuck here, right? Okay. They'll pull back. And then they'll do another move. Sometimes they won't do the second leg. Sometimes they will. But if they do the second leg, it's very important though. If they come to this level and fail to take out this LOD, it's fine if they throw a wick down here. That's fine, as long as it closes above this tracer, above this blue tracer. If they do this on the Sunday coming into a Monday, man, you got them, man. This is an anchor point for the week. So what do I expect from here? So okay, Cash. So what's next? All right. So you got the anchor point. What do I expect? I expect this: day one, day two rise, day three rise. Keep in mind the market is based on a 3-day, 3-level cycle. So 3 levels, 3-day rise. This is what I expect. And after 3 days of rise, you got to start thinking like a market maker. You know, the guys, you know, you're buying, he's selling to you. On the second day, you're buying for him, he's selling. And on the third day, he's like, okay, well, I need to correct the markets. So they're going to do this. On the third level, though, keep in mind, it's a very aggressive movement. So you're going to see 3 intraday levels on the third day of rise. So if you want to write that down, feel free to do so. This is going to be the most aggressive day, the third day. So they're going to do this. You're going to start noticing pins to the top side of the zone they are working. You're going to start seeing pins. Wicks to the top, wicks to the top. Okay. And then the same thing, the same crap. They do this every freaking week. The same thing. They just, variations on the theme, of course, But I'll explain those. I'll explain those. So they're the same thing. Pullback, M. They'll probably do a multi-session M. I'll talk about it on the next lesson. Multi-session M, possibly. And then the same thing. You expect this. 1, 2, 3, pull back and end the week in consolidation. Back in the range. Back in the range. Back where they started. So this is what I mean about the false move, about Sunday, Monday, right? The beginning of the session. Okay, and then trading times. We'll talk about the trap moves in the beginning of the session. You can write these down if you want to. These are the trading times. These are the true trading times. 4 p.m. high-low reset. 4 p.m. high-low reset. What I mean by that is that they'll let me get some of this off real quick. When you have your LOD indicator, which I'll give it to the group later, it's a blue tracer, like I said. So at 4 p.m. Central Time, these are Central Time, okay? So 4 p.m. Central Time, wherever price came from here or from here, wherever, they're gonna do this. They're gonna go this, and then consolidate around this range. So this move right here is gonna make the IHOD, the initial high of the day. And this move over here is going to make the ILOD, which is the initial low of the day. So they're going to trade in this range, right? And then from there, depending where you are in the cycle, you'll know where to go. You'll get your directional bias from there, right? Cool. Good stuff, good stuff. Give me a second. Any questions so far? Everyone okay? Feel free to put a message on the chat if you have any questions, okay? I'll look at them. Okay.
Bless you.
All right. So yeah, so you can write these down if you haven't written them down. I'll give you about 15 seconds, or just take a picture or whatever you want to do. Asian session, 7:30 p.m. to 2 a.m. Gap time. So gap time, for those that I know some of you are new here, so I'm gonna explain to you what happens at gap time. Gap time. So this is when the market maker comes on duty. The market maker, like an actual guy, he shows up, and he gets his instructions from his boss for the day. What instructions, Cash? What are you talking about? The boss tells the guy, hey, what's up, man? Just an example. This is just an example, Hey, man, I got long holders trapped high on aggregate 137.047. I need you to hit the stops, pick up some pending orders, over there, and I want you to bring price to 135.025 by the end of the session. That's all that happens at gap time, and you know the market maker just be like, all right, Roger that. So that's what happens at gap time. And then New York session 8:30. These are central times. So wherever you are, convert these into your time zone. Okay, these are central time. These are central time. And the end of the day gap is 4:30. This is the end of the day. This is usually when the guys scalp the markets with robots. This is just the end of the day gap. The market's pretty much dead at this time. So don't expect much movement. That's why at this time you don't expect much movement. You just expect consolidation, right? Am I moving too fast or everyone okay? Let me see. Check. Yeah. Oh, Central Time. Danny, Central Time. So I think you're in Los Angeles. So it will be I think 3 p.m. Your high and low reset will be at 3 p.m. I believe. Okay. Cool. All right. Let's move on to the next slide. All right. Beginning of the session. Let me illustrate this for you because I want you to understand completely what the hell going to be happening. All right, beginning of the session. Okay. Notice here the Asian range consolidation. Usually in a perfect world, the Asian range is always choppy. In a perfect world, right? Let's see. Okay. Consolidation. You see over here this pin, the ones that put the buy stops over here, these guys get trapped. See how it says trigger the pendings, trigger these guys, and then drop price on them. They drop price on them. These guys get stopped out. Right? Hey, look at this. You see this over here? You see this is the blue tracer I'm talking about. This is the LOD, which I'll later when we're done with the lesson, I'll give you this indicator. This LOD is like, I guess you can say, the strongest support there is out there. I'll explain it in a few. So this is the LOD. You see how they did this, and then they rose price aggressively with one candle. With one candle, they shifted all this work over here they did in one candle bar. They took it out. They took out all these suckers here. But we know better. Us as a group, we will know better because the LOD held. The LOD held the whole time. So what do we expect? Price rise, and then correction. After every aggressive move, you expect correction again. So what do you expect? The M back into the range and consolidate. That's it. Got your good 50, 60 pips here. You're out. So that's the false move. This is the false move. This was in London, by the way. So the beginning of the session. So over here, this is London. You see this false move, red candle? That's the false move to trigger the guys that went short. And these guys, man, they got stopped out massively. And those who got it right there. Okay, cool. All right, beginning of the session. So that's the beginning of the session. So every beginning of the session, there's always a false move, most of the time, mostly always, okay? So I want you to know that. Okay, so here. This is a trade I took a while back, and I want you to see something. Okay, see how when you don't, I guess you can say when you don't pay attention, how things can be. You see, you see this, right? Okay, I'll talk about the multi-sessions, M's and W's later on the next topic. But okay, this is what I mean. You see in the Asian range, they did a false move. You see these two candles? They did the false move in the Asian session though. They variation on the theme. Sometimes they do it on different timings. On different timings is what I'm trying to say. So here they did it around 8 o'clock. I sold here. This was a trap move, and look how they shifted the zone. And also look at the tracer. Look at that tracer that held. That tracer that held. I got stopped out around this area. This is a trade I took it like 3 months ago, 2 months ago. So I got stopped out here. So this is why it's very important to recognize these false moves. It's very important to recognize these false moves, okay? Again, Asian range, accumulation, come down, the V3s. I'll talk about the V3s on the next lesson, but there are 3 vector candles, 1, 2, 3, shadow into the shadow box. You start noticing they're working the low. You notice that the pins turn to the downside. You can see my mouse where I'm pointing. They start pointing down to the downside, right? So it makes this like V bottom. Keep in mind you won't always get W's. You won't always get a pretty W. Sometimes you just get a V bottom. But when you can identify these zones and you know where you are in the cycle, you'll know that this is a safe trade to take. Asian range accumulation, 1, 2, 3, into the shadow box, beautiful. And then they keep in mind this green candle here that I'm pointing at you right now was in solid red the whole time, scaring the buys, scaring the guys. And then it shifted back into green, and you see it an aggressive move back into the range. Another M, and then back, 1, 2, 3, back into consolidation. Pretty simple. Pretty simple stuff right there. Okay, same thing over here. All right, Asian range. This is a straightaway. I'll talk about this on the 3rd lesson, but this is a straightaway trade right here. This is like I'd say a fake W. So, but when you know where you are in the cycle, you'll know what I mean. But I'll talk about the straightaway trade. But okay, so you see 1, 2, 3. Back, they went to New York, and back in Asia, you see this where I circled here. That's 1 in the LO. This is where your ADR low is at. I'll talk about the ADR low, but your ADR low is here. So you see this pin down to the side. It went up and went up and went up. Accumulation zone, consolidate, and then again they repeated the level in London and failed to break the zone. So your entry is here where I circle in this green candle. Your entry is here. Your first take profit could be the Mayo, which is a 200 EMA. I'll talk about the Mayo. Painless trade. Got out, and they need to correct the markets again, and they did. Back into the range.
Oscar, is this on the 15-minute time frame?
Yes. All my charts are on 15 minutes, unless we're counting the levels. Which I'll talk about on the last lesson. We're on the levels. We're gonna, like on the weekly structures, we're gonna use the hour and the 4 hour. Okay, but I'll get to those on the 3rd lesson. Okay, but all these are 15 minutes, right? Cool. So look at this. Isn't it funny? This is a recent chart. Look at the date. This was on July. This last month. Okay. The same thing. So as you can see, the same things apply. Asian range, accumulation zone, consolidate, went up. Notice the blue tracer. Notice the blue tracer over here where I'm pointing at right now. Notice the blue tracer. Yes, the price went above, but keep in mind, look at this. It did like a kind of like a crappy head and shoulders. But see, here's the key where I circled this last circle right here. They did this monster wick to the top, and then this railroad tracks. I'll talk about the candlesticks on the next lesson, but this candlestick right here confirmed that this was an entry. This confirmed it. it, you see how the candle closed below the LOD? I mean the HOD, excuse me. The HOD, it closed below it. You know this trade was safe to take. Your entry was right there, and a monster move to the downside, 75 plus pips. Your take profit could have been, you know, Mayo if you're a short-term trader, and over here to that would have been okay, the blueberry. And then what do I expect after that? Consolidation again in the Asian range again. Let's look at the chat. Okay, cool. All right, let's move on. Okay, reversals. So reversals, you see how the same thing applies? You see how they can y'all see this over here, or is it too zoomed out? Let me look at the chat. Okay, looks like I guess everyone can see it. Okay, all right. So you see zoom in a little bit so I can show you. Okay, cool. So me, as I know, when you can check, I know a lot of you have trade on the phone nowadays because you can't sometimes get on your computer, but that's okay. The same rules apply. So this is why I'm showing you examples that it can be done on the phone too, but I recommend it on the computer. Okay, so here you see this. You see the pins to the downside on this area. I knew the LOD was here for this trade. I knew the LOD was here because I saw it on the computer. But you see the pins over here trapping all the sellers, They came back and missed it. They did not come back here because why? Why didn't they come back there? Because they're not in the business to let go of the money. They're not gonna release these guys that are stuck here. They're not going to release those guys here. So they shifted the zone, a monster move. Your first take profit could have been the water. Second take profit, Mayo. Keep in mind, these are good take profits on your reversals. Mayo, water, good take profit. Now let's look at the next one. Again, the same thing, a W formation, beautiful W, pins to the downside, a perfect entry. Get these entries here. On this location, your blueberry, which is a 800 EMA, could have been your take profit, but I took it a little long and put the take profit over here. And it was because of the levels, which I'll talk about the levels later on. Again, another reversal over here. The same thing, pins to the upside, the side they're working. They come back and don't release these guys that are stuck here. And they do a monster move to the downside again. They do a monster move to the downside. So I want you to understand from this that these pins to the top or to the bottom, wherever the side they're working, are very important. So this is how you identify these areas of potential reversals. Good stuff. Okay, same thing here. The same thing. This is a reversal that's called the cow rod. This is where all the candlesticks are lined up like this. You see, like up, down, up, down, up, down, up, down. Okay, that's a reversal. But I knew this was also a reversal because this was on level 3 in the intraday structure. So when you start applying all these things, you'll understand. But in the meantime, yes, this is a cow law reversal. So, entry right there, This is a confirmation, went up. Here on USD CAD, this is USD CAD. This was a multi-session W. First take profit was my Mayo, second blueberry. Good stuff. Again, same thing again here on GBP USD. You see how the pins to the downside, again, these pins where my pink boxes are. Pins to the downside. They came here. They barely missed it. Well, they missed it. They missed it by a lot. They did not come back to release these guys. shifted the zone in 3 monster candles, and you know GBP is an aggressive pair, so you know you're gonna be down by a lot on that one. And right here, take profits on reversals. The 50 EMA, which is your water exponential moving average, should be used as first take profit in these trades. Okay, the 200 EMA can offer a second take profit. Your 200 EMA, which is the mayonnaise, whatever you want to call it, you can start setting these up on your phone later on. I'll send you the settings for the computer and stuff. Okay. Is everybody okay? Am I going too fast? Okay, cool. Everybody, 1, 2, Michelle. All right, thank you. All right, good. All right, let's move on. Okay, so vocab terms I need you to write down. Accumulation, this is what I was talking about, the initial high and low, which is 4 p.m. They accumulate and evaluate. See, what do I got here? Pendings, hit the stops. Stop hunt, for those that are, that are new here, stop hunt is a false move against the real intentions. The trend, the true market maker trend is the true slow move, the real move, slow and steady, 6 to 8 hours of drop or 6 to 8 hours of rise. This is the true trend. I'll talk about the true trend. I'll show you some examples of it. Okay, let's move on. Okay, so now we're going to talk about stop hunts and news right now. Stop hunts and news. Okay, so you see, man, this is why I wouldn't like y'all to trade news, but I know some of y'all don't listen, so y'all are gonna go and try to do it anyways. But I'll show you what can happen, and I want you to stay away from it. So you see this on NZD and NZD USD. They did a monster move to trigger the sales. You see this right here? Trigger these guys. They shifted the zone from those. This is why we stay away from news, guys. They can be traded, but you must know exactly where you are in the cycle. Again, kind of blurry, but again, you see the wick where price went all the way down here, and it went all the way up here. Crazy. And look at this other one. Monster wick to the upside, monster wick to the downside. This is why we stay away from news. No, Lisa, not you. Okay. Again, so just to prove to you that news can be traded, but I really don't recommend it. You see this Euro USD? This was on, when was this? June. This is Euro USD, a buy right here. Why? Because I need level 3, but I do not recommend y'all to do it. But y'all still can. But still, I don't want you to do it. But you see a buy here, monster move to the upside. Here, AUD USD. This was last week. You see the news pretty much complete the pattern. That's what they really do. This was what, like a good 80 pips over here, I think. I bought AUD USD over here. It was a W on the blueberry with the trend. Beautiful stuff right there. Good for 80 pips. And then GBP JPY. This was on July. This was a while back. There was a news, caught the wick. Why? Because I knew it was a stop hunt. Triggered those guys, and price went down like 100 pips. They can be traded, but I don't recommend y'all. Maybe when we get to that level, when we all get to the level and help you out to get to that level, y'all can trade the news, but just be careful about it, okay? Okay. Let's continue. Let's continue. Okay. Typical week. This is a typical week, which I showed you. This is what I showed you in that first picture, remember? On that little drawing sketch I did. So you can screenshot this picture. It's going to be very useful, by the way. So Sunday, how I drew it. Sunday, all smooth. You see this circle here? They trigger the stops here. Stop, hunt, high, drop. Shift the zone. These are the day. This is the day the breakout traders get. They get paid. This is the breakout traders here. Okay. You see the W. Now they come here level over here. They make a W over here, and then they do a monster wick to the bottom side. Grab those guys. Grab the long holders, the weak long holders, and then look what they did. These monsters did a massive 3-day rise. Monday, Tuesday, and then again on the third day, Wednesday. They did a multi-session M. I'll talk about the multi-session M now that we're here. So multi-session M or W is one of the strongest reversals that are out here. Why? Because you see how they came here on the Wednesday and they pulled back and they repeated the zone again on London. This reversal is guaranteed to pay. Multi-session M is guaranteed to pay. If they hit the high and do not take this side out, man, on the Wednesday, this is a midweek reversal. This is a midweek reversal to me. So what do you expect from a midweek reversal? You expect rise or drop for 2 to 3 days. And look what happened. Hit the stops, drop. Hit the stops, drop. Hit the stops, drop. And then over here on Friday, swing traders, those who identify this anchor point on the midweek reversal, you can start looking for your exits in New York on Friday. You see how they came here? They hit spike below, came back, ended the weekend consolidation trap. These guys here for weekend carry. This is why we don't carry trades over the weekends, because usually the gaps are very, very they're not friendly.